G'day YouTube, Max Wright here, and I've got something so important to share with you today. I came down to the whiteboard. I want to show it to you right here so I can really explain things. I'm going to be sharing with you today what I think is the most important development in the entire cryptocurrency space since the invention of Bitcoin. And the project that I'm going to be talking about today, I believe, can 100x from where it is now today. I think it's definitely a future top 10 coin. Currently, it's at around position number 40. And there is so much more to go. Now, what I'm talking about is a project called Thorchain, and the token name is Rune. So this is, as I said, this is the beginning of a 4-part series. So you will definitely want to subscribe to this channel to understand the full layout and the implications of what I'm about to share with you today. Okay, but part 1, I'm going to explain at a high level what Thorchain is. I'm then going to show you all of the different actors involved and how they interact with each other and how the network is secured in that way. And finally, and then maybe part 2, I'm going to show you how to actually acquire Rune and how to get your hands on Rune, how to buy it. And then I'm going to move into an interview part of the series. So in part 3, I've got an interview with Michael Perklin, and he is a Shapeshift, I think it's chief, I don't want to get his title wrong. But I think he's a security officer, chief information security officer, but I could be wrong on that title. My apologies, Michael. Yeah, so he's been working closely with Thorchain. It was an excellent resource to tap. And then I have another interview lined up with CEO of Shapeshift, which is Eric Voorhees. Eric Voorhees, one of the original gangsters of the Bitcoin world. In 2013, his website, Satoshi Dice, accounted for 50% of the transactions in the Bitcoin network. So he's been around a long time. He's seen a lot. He's been in Bitcoin since 2011. And then this is a project that he's very excited about. That's what made me pay attention to it. And so I've luckily sourced an interview with Eric Voorhees, and we're going to be chatting about that soon. So they're the 4 parts I've got lined up right now. I hope to have more parts lined up. So you'll definitely want to subscribe to this channel. And if those parts are already exist by the time you watch this video, there will be a playlist to watch. So look in the description of this video for the Thorchain playlist. So, okay. High level, what is Thorchain and what have they just done that is so special? So what they have done is created the first good example of a native chain exchange to another native exchange, meaning you can go to a website, or you can download a client to your computer, and you can, if you want to trade, like do what you do with like a Coinbase or something like that. I really like Binance to be a better example. And you want to trade Bitcoin for Ethereum. Or if you want to trade Ethereum for Litecoin. And if you want to go cross-chain to some chain to some other chain, there has not been a very good way to do that in a decentralized, trustless way before. You can do that at a centralized exchange like Binance or Coinbase or Kraken, but there has been no way to do that in a good way outside of that. Now, two little caveats. So what has been happening? Well, in the world of Ethereum and in the world of Binance, there have been things like Uniswap, for example, in Ethereum, and you can trade other Ethereum tokens with a decentralized exchange. That's what Uniswap does. And you can do the same with BepSwap on Binance. But what has not been able to be done is to trade in a trustless way, peer-to-peer. And actually, this is not technically peer-to-peer, but just trading where you just send Bitcoin, and then in a trustless, provably, cryptographically understandable way, Ethereum comes back to you, or whatever it is you requested. Again, understanding what has happened in the ecosystem. What has happened in the ecosystem is an atomic swap. Atomic swaps are actually peer-to-peer. You can actually, if you find someone on the internet who wants to swap the same amount of as you at an agreed upon price, then you can switch 2 tokens. But that's very, very difficult because you've got to agree on those 2 variables: the amount you're going to trade and the price that you're going to trade on. What Thorchain has done has brought the principle of peer-to-pool, which is something that we see on Uniswap. There's a pool of funds available, and you can just come in and it's ready waiting for you, and you can come in and swap any amount you want. It's, as long as there's enough there in the pool, you can come and just buy 10 Bitcoin and switch it for, sell 10 Bitcoin for however many Ethereum at the current market price, and you just get it. You don't have to find somebody who's willing to do the swap. It's peer-to-pool as opposed to peer-to-peer. Okay, so why is this so important? Well, we've seen the success of Uniswap. We understand how this works. And what the whole industry is craving for, and so Uniswap is a top 10 coin because it does exactly what I'm talking about in one little ecosystem, the Ethereum ecosystem. What Thorchain does is allows us to do it across all ecosystems. So Bitcoin, Ethereum, Binance, Cardano, you can interact with all of these coins and go back and forth cross-chain. And that is a huge, huge aha moment. It is cataclysmic, I would argue, because it completely unleashes the beast that is cryptocurrency. And it sets us up for the things like Bitcoin being involved in DeFi. See, prior to now, Bitcoin, you can earn interest on your Bitcoin if you use a centralized place like BlockFi, but you can't do it in a trustless way like you can with Ethereum. With Ethereum, inside that ecosystem, you can earn an interest on your Ethereum tokens. You haven't been able to do that with Bitcoin. So this is the stepping stone. It's the first step, and it's the hardest step to getting towards Bitcoin being able to participate in DeFi. And if Bitcoin can participate in DeFi, that is $1 trillion that can come into the DeFi world. And now the gap between, one of the main reasons to leave Bitcoin and go into the altcoin world is because they can do all these fun DeFi things. But when Bitcoin can do that as well, the reason to leave the Bitcoin ecosystem becomes significantly reduced. And maybe you could even say now that so this has far-reaching implications to maybe the Bitcoin dominance. Maybe this is a catalyst for Bitcoin dominance growing and securing itself as the reserve asset. Because right now we see Bitcoin dominance down to about 40%. Now that yins and yangs all the time. So right now it's at a relatively low point, but some people think that's a long-term trend, and maybe there's an argument to be said for that. But for Thorchain now coming in and stepping up and providing DeFi to Bitcoin holders and all the other token holders, now all of a sudden you might have a different thing. You've got the largest hash power with Bitcoin. It's the most secure network in terms of hash power. And so if you can have that most secure network and have DeFi attached to that and now do things like smart contracts with Bitcoin, this can totally change the game. The implications from this are a lot. And so we're going to be talking about this Thorchain ecosystem. And already I've just had a thought. I already know what I think part 5 I want to be. What are the other things how does it affect the market outside of Thorchain? What is this? This is such a cataclysmic change for the ecosystem that it's going to have a lot of different implications, and we'll be able to be interesting to a thought experiment to see where this goes so we can position ourselves as investors. Okay, so that hopefully is a good explanation of where we're starting with what Thorchain is. So I guess now I want to get to the whiteboard and I want to show you how it works, and I also want to talk to you a little bit about potential. So right now, the Thorchain coin, Rune, has a market cap of $4.5 billion. It's position number 40 or so in coin market cap. And we will get to this later, but a kind of a floor for the price of Rune and for the market cap is 3 times the value of all of the assets that are traded in the system. So there's Bitcoin in the system and Ethereum in the system, and they're all sitting there in pools, and they can trade back and forth, and users like you and I can come along and use them and trade. The value, if you add up the value of all the chains, all the Bitcoin in the system, all the Ethereum in the system, all the Binance in the system, add up all of that and multiply it by 3, that is a really good understanding of the floor for the price of Rune. You'll understand that more as the video goes on, but I wanted to just get that out there. So right now, the market cap of Rune is about $4.5 billion. Something you should understand, just Uniswap, which just services the Ethereum network over here, has $90 billion locked in it, right? And Thorchain has the ability to do all of that ecosystem and the $1 trillion Bitcoin system and Cardano and everything else. And something else that makes me very excited about this as an investment is it is chain agnostic. Let's say some fatal flaw is discovered in Bitcoin and it just goes to hell, it goes to zero. It doesn't matter because Thorchain is servicing all of the coins. As long as some cryptocurrencies succeed, Thorchain is going to do very, very well, is my argument. So I love the fact that it's chain agnostic and it just services the whole industry. Same way Coinbase or Kraken, they don't care if Bitcoin's on top or Ethereum's on top. They just don't care. They're there to service the trading back and forth. Okay. Yes, and there's another little concept. Well, I guess the people who, so if you have Bitcoin right now, there's not much you can do with it. You like Bitcoin, you want to keep Bitcoin, you're a long-term hodler, you just want to hold on to it. Okay, no problem. What do we do with it? You can't really do much with it, except like I said, the BlockFi example. But now we can use Thorchain, we can earn a yield, where we can earn an interest rate in a trustless way, in a way that has no KYC, no AML. You can preserve what privacy you have on the Bitcoin chain. And I think that's a game changer. I'll give you an example. MicroStrategy has about $5 billion worth of Bitcoin at today's prices. All right. The interest rate that Bitcoin holders can get on the Thorchain network is around about 10%. Meaning, let's just say Michael Saylor decided to put his $5 billion into Thorchain. He would be earning MicroStrategy would be earning $500 million per year in interest for depositing his Bitcoin there. That's available to him, it's available to me, it's available to you. MicroStrategy as a company typically makes a gross around $500 million per year. In actual net profits, it's like $50 million per year. This basically, I mean, he can do this and just with his Bitcoin holdings, 10x the revenue of his business. And there's no other good, clean way to do that right now. So I hope I've got you excited by this, okay? I hope this has like juiced you up a little bit just to pay attention, because the Thorchain is an exciting project, very exciting. Okay, next, I want to talk about economic incentives. Whether you know it or not, the whole blockchain ecosystem is built on economic incentives. The reason Bitcoins work, there are two actors in the Bitcoin ecosystem. There's the users and the miners. And basically the users depend on the miners to make the network function and work. But they don't know them. I don't know who they are. They're in continents far away. I don't know them, and yet I can trust them. Why? The answer is there are economic incentives built into the system where a miner it would be suicidal and crazy to go and lose all this money trying to cheat the system, right? You've got invested all this money in mining hardware, and you can make an absolute fortune mining Bitcoin, right? Or you can go and do something that would damage the network and make all of your assets and your mining equipment completely worthless. And so even though I don't know this person, even though they're from a different culture, even though I couldn't find them if I was angry at them and wanted to beat them up, I can trust Bitcoin miners because of the economic incentives. In Bitcoin, there's just two actors, users and miners. In Thorchain, there are four primary actors. And these four actors, I'm going to go through here, right here on the board, and you're going to understand the economic incentives. And I think once you do understand the economic incentives, you'll start to appreciate, oh, okay, I understand. This is how they've achieved what was seemingly impossible not too long ago, cross-chain communication between Bitcoins. And once you understand that, I think you'll understand how this ecosystem works. And by the way, you can be any of these four players. You or I, the same way you or I could be Bitcoin miners, you or I could be any of these four players, and we're going to understand the economic incentives for each one. So let's understand how the Thorchain ecosystems works. All right, I said there were four actors. The first actor is a user. Pardon my handwriting. The first actor is a user. Okay, this is the person, think of it as someone who's using an exchange. And there's going to be a lot of things you can do here. So my metaphors will drift in and out. But like, let's say you either Uniswap or Binance. It's like you want to deposit Bitcoin and to use it to buy Ethereum. That would be a person who's a user, right? Likewise, BlockFi.com, you just want to put your Bitcoin in there. Well, so that's not a user. Sorry, take that back. Okay, person number two. This would be a LP. This stands for liquidity provider, a liquidity provider. The third person can go by a few different names. I'm going to call them an ARB, and that's short for arbitrage. These guys are arbitragers. I'm going to explain what they do. Don't worry if that makes not a lot of sense right now. But these people are called arbitragers. Another name they go by is the name of swappers. And so they're there. They also have another name which can be active liquidity provider, but don't worry about that just yet. And the fourth person is a node operator. A node operator, and that would be the closest equivalent to that would be like a Bitcoin miner. They're the ones who make they have the actual hardware and the machinery that make the network operate. So we're going to go through these 4 users and understand how the system works. Now, to begin with, I think we'll start on step number 2 and go with a liquidity provider. Now, a liquidity provider, what that means is they're someone who owns Bitcoin, who owns Ethereum, who owns Cardano, who owns Bitcoin Cash, and they don't want to sell it, they want to keep it. They would like to earn a yield on it. That would be fun, as long as they can do it in a safe way, in a way that they believe they were going to get it back. The money was not really at risk. And if they could do it preserving their anonymity and not going through KYC and not going through AML and not having the risk that the company they've left their money with might run with it or might bankrupt, or one of the employees steals everything. If they could do it in a trustless way, they would like to earn a yield on their cryptocurrency. So what they do is they come along and they put their cryptocurrency into a pool. So all of the Bitcoin people. So let's say we've got a Bitcoin pool building up here. And then someone comes in and puts in 10 Bitcoin. And the next day someone comes in and puts in 1 Bitcoin. And the next day someone comes in and puts in 100 Bitcoin. And so on and so on. And this pool builds up and there's just Bitcoin. And what the user kind of remembers, the system remembers exactly what percentage of the pool is yours. So when the first person put their 10 BTC in, they own 100% of the pool. The next day, when the next guy comes in and puts in 1 BTC, well, now there's 11 BTC. This guy owns 10 of the 11, so it's 10 elevenths of the pool. It now remembers he owns that percentage of the pool. Okay, so these guys are putting their BTC into the pool, and they're doing it. They're going to make it available for the users to buy. But here's the part that trips a lot of people up. So let's slow down on this part. The liquidity provider, he doesn't want to sell his Bitcoin. It's just a savings vehicle. He's putting it in there like a bank account, like you go to Chase Bank or Wells Fargo, and you put your money in there, and you understand the bank goes and does some fun stuff with it, and they give you an interest rate for you. They used to give you an interest rate for your deposit. They don't want to sell it. So they're not going to sell it. However, it's in the pool, and the purpose of the pool is to make available for the users to buy. But we'll see how this plays out in a minute. So the liquidity provider is building up this large pool of funds that are available for purchase, and yet they're not at risk of selling their Bitcoin. It's a strange concept, but we'll get to it more in just a little bit as you'll understand why this happens. Okay, so eventually you understand how we build up a pool. And there's a big pool right here of BTC, Bitcoin. That's a pool of Bitcoin. Let's write it in here, BTC. Now, the way the Thor project works is there must be a corresponding pool of rune. That's the local currency of Thorchain. And I'll write in here, rune. So there's rune, and they must be equal in dollar value. So if there's $1 million of Bitcoin in the pool, then there must be $1 million of rune. So this might translate to 20 coins, and this might translate to 20,000 coins. But the point is their US dollar level is equal. Now, the liquidity providers do this. So rune holders put their coins in there, BTC holders put their coins in there, and sometimes you can be both people. You can deposit your BTC and your rune. Okay? You can put it in there. So it's sitting in there, and we will get to what the yields that the liquidity providers get in just a second. But for right now, all we need to understand is there's a big pool of Bitcoin and rune. Now, one of the big challenges that these decentralized exchanges have is that they can't talk to the outside world. They can't go and a blockchain can't go and look at the price of Bitcoin on Coinbase or Kraken. And the reason they can't do that, you don't even want them to do that, is because those prices can be manipulated and a whole bunch of other things. But blockchains just aren't built to deal with the outside world. So they only have to deal with the inside world. So here's how the next part of this, the thing works. The price of BTC versus rune is the price because these pools are equivalent in US dollars. So now our first user comes along. I'm the first user. I come along and I say, I want to buy rune with my BTC, please, Thorchain. And Thorchain says, okay, no worries. And by the way, the user experience for this is spectacular. I can't even describe. That's I worked with some atomic swap chains in the past, and I understood them, and so the user experience was just absolutely wretched, and it prohibited from ever being a serious player. This peer-to-pool model, the experience is fantastic. You just click on, I'm going to deposit Bitcoin, and I want to take out rune, and here's where I want you to send the rune, and then you send the Bitcoin, and that's it. And then you wait a little short amount of time, like sometimes seconds, sometimes minutes, and it just comes straight back to you. Usually seconds, even though the Bitcoin block time is can be up to 10 minutes. For relatively small deposits, one confirmation is all you need, and the rune just comes back to you. And on other chains where the block time is faster, it happens in seconds. So the user experience is absolutely phenomenal, just so you know. So a user would come in here and say, okay, I want to buy rune for Bitcoin. So what does the user do? The user sends money to the Bitcoin pool. The Bitcoin pool just got bigger. The system sees that that's what happened, and it sends me rune back. So what just happened? The rune pool just got smaller. The Bitcoin pool got bigger, the rune pool got smaller. We now have a problem. These prices are now out of equilibrium. Okay, so here is where actor number 3 steps in. This is a person called an arb. These guys are incentivized to fix this right here, right now. So, and they'll do it instantly. They'll have computers running that's sitting there watching these pools, watching it all day, watching. They're watching the price of Bitcoin versus rune on, say, on like Kraken, on Coinbase, and they're watching it on all these other different markets. And so they know what the price is, right? Because this isn't a blockchain. These are actors. So they can have software to look at it, look at Kraken, look at Coinbase, look at all that stuff. And they'll have accounts there with money in them ready to rock. And they see this imbalance happen. Boom. What this means is on this exchange, rune is undervalued and Bitcoin is overvalued. After my transaction, the pools got out of balance, and now we have an opportunity where the accurate price is not being reflected. So an arbitrager will look at this and say, like before my transaction, the price of Bitcoin versus rune on Kraken and Coinbase on external exchanges was the same as the price of Bitcoin versus rune on Thor project. They were the same. But I just went in there and did a transaction, and I made it unequal. Now the arbitrager has an opportunity. The arbitragers or the swappers come in to fix the situation and make a profit for themselves. So what an arbitrager will do, or a swapper, what they're doing is, although the blockchains can't see to the outside world, the arbors can. They've got accounts at Kraken, at Coinbase, at everywhere else, probably multiple exchanges, and they've got pools of money sitting there, and they're ready to act whenever there is an imbalance. So they're sitting there, and they've got computer bots and programs doing this, right? And they're scanning the Thor project ecosystem for when somebody like me comes in and brings the pools out of balance. I got some rune, I paid with Bitcoin, now the pools are out of balance. Compared to the prices on the central exchange, the prices just got out of balance, and so now there's an arbitrage opportunity. So what the rune system wants is for somebody to come in and pay rune and build the rune pool back up and withdraw Bitcoin. That's what the system wants. That'll bring the system back into equilibrium. But an arbitrager, he's here to arbitrage. He's not there to try and trade. He just wants to do a no risk play. So when he sees an imbalance happen on the Thor project, he'll go, over here I can buy Bitcoin with rune. Simultaneously on Kraken, on CoinDesk, Coinbase. What I can do, here I wanted to buy Bitcoin with rune, I can buy rune with Bitcoin on the centralized exchange. And what that does, the arbor profits from that small arbitrage that probably lasted for a second, right? I came in here, I made the pools uneven with my transaction. An arbitrager, he fixed the pools and did an offsetting transaction on a centralized exchange. And all that happened was he made a small spread because the price was out of balance for a fraction of a second. And with this mechanism, the price of Bitcoin versus Rune and all the other pairs are kept in balance. Also, you will notice the liquidity provider, the guy who just put in Bitcoin, he wants to hold Bitcoin, doesn't want to buy it, doesn't want to sell it, even though his money was used in the pool and it gave the pool depth, which is very important, his Bitcoin is still there because the arbitrager came back and was incentivized to make him whole and make the Bitcoin pool whole again. So that is how these three guys interact. So this is pretty awesome. So this is how the exchange works. Okay, let's go through it real fast. The user, they come along, I want to buy Bitcoin for Rune, no problem. They send in their Bitcoin, they get Rune back. If anything goes wrong with the system, if the network's down, if anything, whatever, the Bitcoin is just returned. So the user can't really lose. They either get the trade they wanted at the price they agreed to when they click go, or nothing happens and they get it sent back. That's all that happens. Maybe they could lose money on the BTC chain fees, perhaps. So the user's good. The liquidity provider, he puts in his BTC, his Rune, his Ethereum, his Cardano, his whatever, and there's now this massive liquidity pool, so people can come in and be buying and selling hundreds of transactions per second, buying and selling all these different cryptocurrencies across all these different pairs. And he's going to be able to, 6 months later, 12 months later, a year later, he can withdraw his same amount of Bitcoin and he's earned a yield on it the whole time. We'll get to the yield in just a minute. And there's this third actor, the swapper. He is providing a service to the network, constantly rebalancing every fraction of a second these pools, and he's making a small arbitrage with the centralized exchanges versus these exchanges, constantly bringing the price, the centralized exchange price is always reflected in the pools for the user to come and experience. Okay, so for the user, this is just a normal exchange, just like Coinbase, just like Kraken, except what? No KYC, no AML, no institutional risk. There's code risk, but not institutional risk. You don't have to worry about an employee stealing the money, but here you could, if there was a fault in the code, that could happen. That's the same thing with Bitcoin, it's the same thing with Ethereum. If there's a fault in the code, then that's the risk for these people. So, as time goes on and as Thor project expands and as there's more and more money in there and as it's been 1 year, 2 year, 3 year, 5 years, people's confidence in the code starts to become better and better and better and better. And remember, as the user, you're not risking much. You're putting something in and you're getting it straight back. So, and you can do it in smaller transactions. So if you're like, I want to trade all my Bitcoin for a Litecoin, it's no worries. Even if it's like, I couldn't bear losing it all, I don't trust the system, you can just cut it up into 10 smaller transactions and send in the BTC and get the Litecoin back. Send in the second tranche, get the Litecoin back. So for a user, it's a very, very safe experience. Now, if we look at Coinbase, just got IPO'd for $100 billion. Why? Because they're making a ton of cash as an exchange. Users are willing to pay fees for the privilege of having these big pools of capital that Coinbase have amassed, and I want to come in, I buy, and there's a pool ready for me to sell. It's boom, I buy, you sell, I know I get what I want immediately, no problems down. Thorchain is offering the exact same service, and users, as we know, are willing to pay a fraction of that trade for that privilege. So Thorchain actually earns income. So here's an important aspect. Here's where Thor project actually earns income. It's the users pay fees for the privilege of swaps. Okay, good to know. What happens with those fees? The answer is they go to two places. Number one, one of the places it goes to is to the liquidity provider. This is how the liquidity provider earns interest. Thorchain couldn't make money being an exchange for users unless the liquidity providers put millions, hundreds of millions, billions of dollars into the pools. So they reward the liquidity providers with the fees earned in the project. Now here's something that's Thorchain has achieved quite brilliantly. I said the user experience is amazing in this project. The liquidity provider user experience is also amazing. The person who deposits their Bitcoin, even though Rune is the currency of choice on this chain, the person who deposits their Bitcoin can deposit their Bitcoin, and the interest it pays back to them is in Bitcoin. So they deposit their Bitcoin, the money comes back to them in Bitcoin. They don't even know Rune. They've never heard of Rune. They don't care about Rune. It's an irrelevant thing to them. They put in Bitcoin and they earn Bitcoin. Phenomenal. If you put in Ethereum, you earn Ethereum. It's fantastic. Another really cool feature, which is hard to do, but these guys managed to do it. When the user comes in, you've got Bitcoin, so you need to, they pay their fees in the system in Bitcoin, right? They pay in Bitcoin. They didn't need to have some Rune and some Bitcoin and manage all these multiple wallets. They just had Bitcoin. They sent Bitcoin. They paid their fees in Bitcoin. They got back whatever it is they wanted, Rune, Ethereum, whatever. Okay. Person number one, who those fees go to, liquidity providers. Person number two, or actor number two, who gets the fees from this network, you guessed it's the person we haven't mentioned yet. It's the node operators, right? What are node operators? They are like the Bitcoin miners. These are the guys with the big hardware and the big servers, and they're doing all the hard technical work, making sure that when all these three people come to use the system, it works flawlessly, and funds aren't at risk, you can depend on it, all that good stuff, right? The node operator. So these fees are paid in these two different locations. We can also debate about, I think this is a really good basic understanding. A really good basic understanding. I think from here, you understand the four users, you understand their incentives, and you have a pretty good idea of their risk. I've shortcutted the node operator a little bit, but you should have a pretty good idea about each one of their risk, which is very little in my opinion, and all of the upside. The node operator, all right, so there's a few more things. So now I'll go into a little more detail. There's some fun concepts they did. One, the first concept is called the incentive pendulum. The incentive pendulum. The system is earning these fees and it pays out to actor one or actor two, liquidity providers or node operators. And they have what's called the incentive pendulum, and it swings depending on a few things. If the system does this automatically, there's no operator, there's no human being, this is just the software, this is all governed by code. If the pools are not, they want the pools to grow, right? Then what it does is the incentive pendulum swings the incentives so that the majority of the fees go to the liquidity providers. That means the interest rate goes up for depositing your Bitcoin, your Ethereum, your Rune, your whatever in the system. When that happens, the incentive goes up, people are attracted, they start pouring money into the pools. The interest rate goes up, that's what attracted the poor people. Conversely, if there's not enough pardon me, my voice cracked. Conversely, if there's not enough node operators, the incentive pendulum can swing back and say, hey, we need to give more, the majority of those fees now should go to the node operators because we need to attract more, and it's not more node operators, it's actually technically more bond, and which is another part of the system which I can share with you. So that concept is called the incentive pendulum. When you hang around Thor project, you're going to come across that, so you know what it is. It's not particularly important. I just might explain why. I think most of you, the people watching this, are going to be probably one of these three people, probably just one or two. Position 3 and 4, arbors and node operators, there's a fair amount of expertise that you need to do that. I can tell you, I am going to be neither 3 nor 4. I'm not going to do that. I don't have the expertise for that. But do I want to use an exchange? Well, and will I pay fees to do it? Absolutely. I do it already with Kraken and elsewhere. And will I be a liquidity provider? Absolutely. I want to earn interest on my existing cryptocurrency portfolio. So yes and yes, I will be 1 and 2. So yes, so that is the so that's the incentive pendulum. Okay, one more topic I think I want to talk about before I wrap up this video and talk about something else in this video. Before I wrap up this part of the video, is the bond. So throughout the whole experience, so we've done the 50,000 foot view. We're going to go a little deeper now. Throughout the whole experience, there's a whole bunch of backstops to make sure users and liquidity providers and arbors don't lose money and have a good experience. And so the node operators can get punished if they don't have good, if they're not online, like, and keeping your servers online 99.99% of the time is an important feature. If they don't, node operators can get kicked out, new ones will come in, but also they get penalized. Literally, they get paid, the system charges them a fine. And to be a node operator, you have to put a whole bunch of rune into the system as a bond. And what it does is you will get punished if you are not a good, upstanding node operator and provide great service to the system, right? And also, it's just part of the business, which is just good business. Like these people who are going to run the business, if something goes wrong, if they could maybe they could act maliciously, maybe they could just act poorly, not maliciously, but incompetently. Either way, they have to be fully bonded in order to be a node operator and enjoy the fees that come in as a node operator earns. What does fully bonded mean? Here's where we get into the valuation part of Bitcoin, Thorchain. You remember at the very beginning, I said if you add up the value, the US dollar value of all the pools, Bitcoin, Ethereum, Cardano, all the pools in here, if you add that up, the floor price or market cap of Rune should be 3x the sum total of all that. Why? Here's why. In every pool, so I'll change tack a little bit. Something to notice, when you go to like Binance, for example, and you want to buy, you've got some shitcoin A and you want to buy some shitcoin B. On Binance, they don't have that pair. You can't do that. You can't go and buy shitcoin A with shitcoin and buy shitcoin A with shitcoin B. It doesn't. You have to go via Bitcoin or Ethereum. Some exchanges, there's like two reserve currencies, Bitcoin or Ethereum. In the Thorchain world, all pairs are matched to Rune. Now, as a user, you can say, I want Litecoin, give me Bitcoin. You just like send the Bitcoin, Ethereum pops back. You had no idea that Rune was in the background. But what actually happened was your Bitcoin was sold for Rune, your Rune was sold for Ethereum, and your Ethereum got popped back. So there's all currency pairs are against Rune and not the individuals, right? So we've got the Ethereum pool over here with a corresponding Rune pool. We've got the Cardano pool over here with a corresponding Rune pool against that. So if you take the sum total of all of these pools, we can go to 1x. There's a Rune pool here for 1x. So for every dollar of BTC plus Ethereum plus Cardano plus all of the other things in the exchange, there must be the Rune in a corresponding pool, which means people are incentivized to buy up Rune to make these things work. Those arbors, they're always buying up Rune if it needs to, or buying back BTC, but there is always a corresponding value for Rune. There has to be for the ecosystem to work. If not, the incentives kick in to buy up Rune and drive the price higher of Rune. That's how it works. Now that's a 1x, right? So add up Bitcoin, add up Ethereum, add up all the coins, the US dollar value, there must be that amount of US dollar value in the corresponding Rune pools for the system to function. And incentives will kick in to drive that. So that gives us our 1x, okay? Correspondingly, the nodes have to be bonded. In order to be a node, you have to have deposited 2x the Rune of all of the pools collectively. Collectively, the node operators have to have bonded. So not each individual node, but collectively, the node operators have to have the Rune bonded to be part of that. To have the privilege of being a node operator. You cannot be a node operator unless you put up the bond to make sure the users are protected, to make sure the liquidity providers are protected, and to make sure you get punished if you are not a stellar node operator. Those punishments I talked about earlier. Also, now being a node operator is a very privileged position. It's a position that makes a lot of money. You are the Coinbase. you're getting a portion of the fees, whereas Coinbase gets all of them. So the node operators, they get a portion of the fees, but they incentivize the liquidity providers to be in the system with them. So to be a node operator is a very privileged position and one that can make the person a lot of money. But in order to do it, you have to be bonded. And the node operators kind of cycle in and out. It's called churn. The more bond you have, it's not explicitly just this factor, but it's a factor. The more bonds you have, the more likely you are to get to be the node operator. And the node operator churns every like 3 days. So there's new node operators coming in. You don't know who they are. You don't understand who they are. You just understand in order to get to be in this position, if there's like, $1 million worth of Bitcoin plus Ethereum plus whatever, in order to, in this network and users are coming in, buying and selling, in order to be the node operator, they have to put in $2 million worth of rune collectively, not each node operator, collectively. You got to do a portion of that for each individual node operator. So what's the result of this? And like I said, the more you bond, the more likely you are to be a node operator. So node operators are buying up rune to put in as their bond so that they have the privilege of being node operators. That's driving up the price of rune. That's one of the built-in mechanisms that drives up the price of rune. The net result is that you've got 1x from the pool pairs plus 2x from the node operators as bond for a net result of 3x. There are incentives built into Thorchain that make some of these actors buy the rune to drive up the price of rune so that it is always at least 3x the sum total of the dollar value of all the assets, Bitcoin, Ethereum, etc. All right. Now here's where I really want you to go, oh my God, this is obscene. I think we're done with this. I hope we are. I want you to understand that 3x concept. And what we're talking about is market cap, right? Market cap. So Rune currently has a $4.5 billion market cap. We talked a little bit earlier about Uniswap. Uniswap, which only services the Ethereum ecosystem, that's all. Uniswap has $90 billion locked up in their pools. Liquidity providers have provided $90 billion worth of Ethereum and other ERC20 tokens. And they've put in $90 billion in just that ecosystem. But this ecosystem, it doesn't just serve one of those things like ERC20. It serves Bitcoin. It serves Binance. It serves Ethereum. It serves Cardano. It can serve all of them. It's just the whole ecosystem, including like coins that don't even have an ecosystem. When I say don't have an ecosystem, don't have a DeFi ecosystem, like, for example, Bitcoin Cash. What is that? BCH. There is no one. How do you earn yield on Bitcoin Cash? You can do it through BlockFi. We'll get to that. But there is no equivalent of Uniswap. That's only in the smart chain contracts. BCH, not a smart chain. Monero, not a smart chain. Pirate Chain, not a smart chain. Dogecoin, not a smart chain. There is no way to do any kind of yield. All of that market cap, for the very first time in the coming weeks, are going to have the ability to deposit their funds in Thorchain and start earning yield. Uniswap has got $90 billion in there at present, growing like a weed, and all just servicing the ERC20 token. Now, right now, we have $1 trillion of Bitcoin. We have, add it all up, we can look at the total market cap. It's something like $2.5 trillion worth of cryptocurrency out there. Now, some of it, like a good chunk of it, for example, Ethereum, that actually does have a competitor in Uniswap. Obviously, the functionality of Uniswap is less than Thorchain. On Thorchain, you will be able to buy and trade like Ethereum for Uniswap. They're both ERC20 tokens. But you can also do that on Uniswap. You can also do it on Thorchain. But Thorchain, you could swap your Uniswap token for Bitcoin or for something else, right? For Bitcoin Cash, for privacy coin. You can do that. So I think it's fair to say that some of the money on Uniswap is going to be pulled over into here. Some of the money in the ERC20 pools will be pulled onto Thorchain. Some of the money in the Binance will be pulled into it will be put into Thorchain. And then you have Bitcoin, Bitcoin Cash, etc. Those ones that are not, they don't have DeFi protocols. They're not smart contracts. They're just coins. You have all of that potential to come in here over the space. Now, all right, another little data point here. BlockFi. BlockFi currently has, I just looked it up, $15 billion under management. And the interest rate, I'm sure Bitcoin is the majority of that. I think the current interest rate on Bitcoin is, I think, 2.5%. So, going through KYC, going through AML, going through everybody knowing your business and government agencies and spying agencies and all that kind of thing, going through giving up your anonymity, exposing yourself to institutional risk. There's $15 billion put their money into BlockFi in order to get some kind of a yield. For Bitcoin, it was about 2.5%. For the other coins, it was a little bit higher. Right now, on Thorchain, you can deposit a good chunk of those same assets, and Bitcoin included, and get close to 10% yield. I think it was like 9.8%. And no KYC, no AML, permissionless, global, nobody locked out. BlockFi has several countries they won't serve. This is open to everybody, absolutely open to everybody. And the current interest rate is 9%. You do not have institutional risk. The trade-off is you have code risk. By the way, I'll jump sideways for a second. Let's talk about code risk. Right now, you actually cannot put money. I mean, right now, the day of this recording, you cannot put Bitcoin into Thorchain. Some people have, but the developers have capped it. And what they're doing is they're slowly raising the cap. Thorchain, in my opinion, is a racehorse in the gates, in the barriers, flared nostrils, ready to rock. And the developers have said, listen, this chain's been around for 4, 5, 6 weeks. We don't want $1 billion coming in here overnight. We need to manage this. We need to manage it. Bugs come up, it's code. Of course, bugs come up. We don't want 100,000 people experiencing a bug. We want 15 people experiencing the bug. We fix it. We bring in another 50 customers. We bring in another 100 customers. We bring in another 1,000 customers. We bring in another 10,000 customers. And the developers are being very, very smart and are capping so far the amount that is in these pools. But in my opinion, this is going to happen very quick, weeks and months. This cap is going to get raised more and more and more. And the money, I think, just sitting there waiting to pour into Thorchain is going to be spectacular. Absolutely spectacular. There's $15 billion just in BlockFi, right? There is almost $1 trillion, no, sorry, that's not true. Almost $100 billion in Uniswap. And there's entities that just can't play. Oh my God, the Bitcoins, whatever. The entire space, current valuation, $2.5 trillion roundabout. What percentage of this do you think will come into this groundbreaking chain? What percentage? Is it 1%? Is it 10%? Is it 20%? Is it 100%? I don't know, over like 10 years, 15, 20 years? Could be 100%. Now, the caveat, there will be competitors. There are no competitors which have a product at the moment. There's something to consider. I think I might do, that might be video number 6. I might talk about that a little bit later. So it's not to say they're going to get 100% of the market share, but they're first. The product is working. You can use it now. You can go and be a user right now today, and you've got like 15 different currency pairs you can trade. Right now the developers are putting the cap on, and I know I'm in the message boards, I'm in the chat rooms. There are people screaming, "Let me earn 10% on my Bitcoin. Let me earn." And these pools are just going to get flooded. And what happens is, if you understand about exchanges is the depth of the pools are important. if the deeper the pools, the smaller the fees are on the network. Also, it can handle large transactions. You don't want to, if it's a small pool, large transactions just can't get involved. That's like, I mean, yeah, your pool's like 10 Bitcoin, but I want to buy 100 Bitcoin. So the deeper the pool, the bigger the whales can come in. Okay? So there's all this thing just waiting. And there's Thorchain that is just what this whole ecosystem has been begging for, has been crying for since Mt. Gox. When Mt. Gox collapsed, it was just such a carnage for the entire cryptocurrency ecosystem. And from that, I mean, people understood beforehand, but from that, everyone understood. We want to be able to trust exchanges like we trust Bitcoin, right? We don't, right now, he's not some shady guy that no one knows in Japan, which is what Mt. Gox was. Yeah, right now it's a publicly listed company, with Coinbase and, Armstrong there, and he's a $100 billion company, and all the incentives are there, and he's in the US, and it's highly regulated and a whole bunch of things. So it's a lot better than the Mt. Gox situation. But it's given our love of trustless environments, cryptographically provable things. I think people are going to, and Uniswap kind of proved it, that people are just going to gravitate towards Thorchain like crazy. But this is something that the industry has been begging for since all the way back in, like, I think 2013 or 2014, Mt. Gox collapsed. And this is a combination of something really, really cool. Really, really cool. So guys, do me a favor. Let me know in the comments below. Do you have a better understanding of what Thorchain is now? Do you have any more questions or any specific topics you want me to answer with regards to Thorchain? I can maybe do a Q&A on it. I can maybe, and if there's a lot of questions come up, I might do another video explaining it. So please let me know. If you like this comment, do me a favor, like the button. I'm not finished, by the way. Don't go anywhere. I was just doing a little mid-video pitch here to get your subscribes and likes. And believe me, this is part 1 of 4 at least, although I've probably got 5 and 6 in my head already. There will be a lot more videos on Thorchain because I think it is significant, and you definitely want to be subscribed to this channel. So go ahead and do that. Okay, so I hope, I kind of teased at it, but I didn't do it. So let's just say 1% of the $2.5 trillion cryptocurrency ecosystem comes into Thorchain. What is that? Well, 2.5 trillion goes to 250 billion, goes to 25 billion. If just 1% comes in, then Thorchain will have a 3x value of that as a floor, 75 billion. So I want to stress the floor concept. There is a floor in that the price can't go below because too many people are incentivized. The node operators and the other people are incentivized to buy up Thorchain. So that's the floor, but it's not the price of it. Like right now, I believe the developers, it's something in the order of only $2 million. I said they've like capped it, like there's only $2 million worth of assets. The project's only 4 to 6 weeks old, I think. I think it's $2 million. I could be wrong on that. It's about $2 million locked up in the pools. But the valuation is 4.5 billion. Now that's way more than the 3x. Wait, right? 3 times 2 million, 6 million. It's valued at 4.5 billion. Okay, so I want to say this is the floor, this price. But in addition, there's a speculative, what's going to be the value of this thing in 5 years? Is more money going to come in? Is the entire value of the ecosystem, if like Bitcoin's at $1 million and Ethereum's at $100,000 a coin and all that, and this isn't a $2.5 trillion market cap, it's a $25 trillion market cap, then what is this worth? So there's a speculative aspect on top. So as I said, right now, this thing is valued at 4.5 billion. If just 1% of the $2.5 trillion in assets, cryptocurrency assets, come into this space, that's 25 billion in. That as a floor puts Thorchain, Rune, at a market cap of 75 billion. I don't know, do the math, 10, just shy of 20. Let's call it 17x. If it was a floor, however, once there's this much money come in, once it achieves that, once that's a top 10 coin, the expectation of where cryptocurrency can go and where it can go is 1,000 miles further than anyone else thought, thanks to Thorchain. Oh, I got to talk about this. So what's coming Like, what does this now allow? It's some just crazy cool things. So I mentioned, so for liquidity provider, that's the number 2 actor. For a liquidity provider, this is just a bank account. It's like you go and you put your money in at Chase. You're not selling it. You're just putting it in the deposit. The business is doing its thing. At any point, you can come and withdraw. You don't have to lock it up. You don't have to promise it. You don't have to leave it there. At any point, you can come in, withdraw your funds. It's just like a bank account at Wells Fargo, at Chase, except it earns interest. Okay. So now here is what is just around the corner. Same thing you do on BlockFi. If you go and give BlockFi $100,000 worth of Bitcoin, they will let you borrow $50,000 out of that, with using that as collateral, right? So you have to pay them an interest rate, of course, but it's fully securitized. You've got it as a bond. Okay, so here is what's going to happen here, which I think it blows my mind. The existing banking system hasn't done this. It blows my mind BlockFi hasn't done this, but Thorchain is going to do it. So you're a liquidity provider. You just deposit your Bitcoin in there, right? It's sitting in the pool, doing its thing, earning interest. Over time, let's say you got $1 million worth of Bitcoin in there, right? You have $1 million worth of Bitcoin in there. Something that, like Michael Saylor's been talking a lot about, you don't sell your Bitcoin. You just don't do it. You don't sell your Ethereum. You don't sell any of these coins. You don't do it. You just keep it. But how do you get to enjoy it? The answer is you borrow against it. And Thorchain is going to, so this is step 1, Thorchain. Coming up is ThorFi, copying off DeFi. ThorFi, okay, so you got $1 million in Bitcoin there, and I don't know what the thresholds will be, probably be 2 to 1, something like that, let's just say. You got $1 million worth of Bitcoin, you will be allowed to borrow $500,000 worth of anything else, including stablecoins. So you borrow your 500K. Okay? You want to go and buy your Lamborghini or something. Now, you're earning interest on the full million still, but you're pay an interest on the 500K. And obviously the amount of interest you pay will probably be higher than the amount you earn, but it's entirely possible that what the system will do is automatically offset these two against each other. It'll just automatically offset it. And so at any point, your money is in the system, earning an interest. And if you want to go on a nice holiday, you can just come in, I'll just pull out 20 grand cash. I start paying interest on that and go on my holiday. And the interest on that small loan, 20,000 versus $1 million deposit, the interest on that will probably pay off that loan eventually. And it'll all be taken care of automatically in the system. So, this is 21st century banking, off the charts. Whatever assets we've all managed to accumulate, whatever crypto assets we've all managed to accumulate, you stick them in there, they're there, you don't sell them, there's no capital gains event, but you can borrow against you're earning interest, earning substantial interest, whatever is in there, and if you need to take something out, you want to spend, you want to go on a holiday, you want to borrow some to go and buy more Bitcoin, whatever you want to do, you can do it. And the system will automatically take care of the money you're earning in the pool, less paying the interest on this, factor it out, and it might be that you can just take money out and the system is paying you more than you're taking. And you just get to live off that without ever having a taxable event, without doing it. This is how it's going to be. Like when Bill Gates, you think back, whatever, 2000 or whatever, Microsoft is in this big thing. He wants to go and buy a $20 million mansion. Do you think he sells his shares so he can go and buy the mansion? The answer is no, he doesn't. He borrows against his shares because the shares are rapidly appreciating. The world of Bitcoin, you've got 21 million coins. There will never be any more. As Michael Saylor says, why would you sell them? And with the introduction of BlockFi and Celsius and some other things, you have been able to. That's all happened in the last little bit. But now we see it in another way. I think a better way. I think a cooler way, where you're earning interest on one side and you're paying interest on what you've borrowed. And it can even be, if you manage yourself well, it can be that you just net that out and you're just pulling money out, enjoying your lifestyle tokens while your wealth grows and grows and grows. And it's actually like, how much do you need? If you've got enough, you don't need to pull out. You can actually live off this forever and ever and ever. So yeah, another, and this, I think we're only like months away from this. This is not far away. This is not 2 years away. This is months, 6 months. I think later this year, we're going to be able to get this here. The caps are going to be raised in Thorchain, so there will be $100 million of Bitcoin in there, maybe $1 billion, maybe $10 billion. I don't know. And you'll be in there, I'll be in there, we'll all be in there. And the valuations, because of this 3x floor, is absolutely insane. You have a floor of where it's going to get to. And then this number was if 1% of the entire ecosystem trickled in. If it was 10%, boom, we're talking 250 billion in assets, $750 billion valuation. And now, what is that? So, we've already done the 3 times, 750 billion. Yeah, from 4.5, what's that? So it's like 17, it's like 170x. So this is huge. Right now, today, this is part 1 of this video. It is the price of rune is really close to $20. $20 rune gives you the $4.5 billion valuation. Now, it's just gone on a 20x. And basically, like we're here we've been in altcoin season for about 2-3 months. Rune has gone from, I think, about 100 and something on the coin market cap down to about 40. And it's just gone on a 20x. So now the question is now a fantastic time to buy rune? Should you wait? Is there going to be a dip coming? Is altcoin season about to finish? There'll be a big rush into Bitcoin. Altcoins going to come down. Bitcoin will take off. Listen, I'm not sure. I don't have any rune. And so the advice I give to any Bitcoiner is I don't care what time it is. I don't care what part of the cycle is. I don't care what the price of Bitcoin is. You can't afford not to have Bitcoin. You can't afford not to. It doesn't matter. Don't ask me what's in the charts. Don't ask me what's the price of Bitcoin doing. You can't afford not to have it because it can just take off and be $1 million a coin in a year at any point. That can happen. I believe the same is true for rune. I'm going to be buying right now because I can't afford not to have it because it could take off like a train. Is it necessarily the best buying opportunity right now? Might I get a better price later on? It's possible. It's absolutely possible. I'm not sure about this because it just went up 20x and I hate getting in at the end of a pump. Super frustrated that I missed this and I didn't find out about it a little bit earlier, but them's the breaks. But I have the attitude that I absolutely cannot not have rune. I have to have rune. But I'm not saying maybe we have a little consolidation. Maybe we have a pullback. Maybe there's better buying opportunities in the near future. So I'm not sure. That's for you guys to decide. What I want you to understand is the importance of the ecosystem. All right, guys, I hope that was helpful. Whatever you do, subscribe to this channel, or if you're not watching this the day it's released, look for the playlist in the description because we have other videos coming out. Walk through step by step how to actually buy rune so you can have it. Third video, an interview with Michael, just a Thorchain enthusiast, happens to work at Shapeshift, but just answers some fantastic questions, really smart guy. It was an awesome interview I had with him. And then the 4th interview I have not recorded yet. I'll be recording it in 4 days, which means you'll probably get it in about 7, will be the interview with Eric Voorhees, original gangster in the Bitcoin world, been in since 2011, has seen all the cycles, has seen all the things. If you want to understand the big picture and the ramifications of this and seeing over the horizon about not just the opportunity that this is, but then what are the satellite opportunities? What are this just went through a 20x, but right, there's probably something just over the horizon, just on the outskirts, that this will now allow other things to happen. And now that we know about this, we can go and look in other areas and find some things that are ready to go 20x, 100x themselves that are going to feed off of this. I don't know, I haven't recorded the interview yet, but I am hoping that Eric Voorhees and I can kind of put some brain power together and come up with some cool things to look for in the future on that. So yeah, guys, please let me know in the comments. Are you excited about Thor Project? Do you think it changes the ecosystem? Are you going to get in on rune now? Are you going to wait, or do you think it's a dud? Walk away. Let me know in the comments. Smash up that like button so I know you want more Thorchain content, and I'll see you guys soon. Take care.